So taking a look at some reversal patterns, I'm going to look at double tops and double bottoms. So when we're looking at a chart, you can find these patterns on any time frame. I'm looking at the daily chart of American Airlines, and you can see here where we had a big drop off and then it formed an uptrend coming up to this point here where we have what I would consider to be a double top. So if we were going to map this out, you have point A, point B, point C, and then point D is where it breaks through the bottom of point B. So right here, draw it out, you have A, B, C, and D. So what we're looking for is two peaks that are at about the same level. Doesn't have to be exact, but pretty close. And then for it to be a complete pattern, you have to have A, B, C, and D, with D breaking through the level of B. And if you're looking at volume, typically you'll see less volume on C coming up, and then a rise in volume as you have your breakdown and move past point B. There should be an increase in volume. Not always, but that's something to keep an eye out for. So that's one example. We can take a look at another on Ocular Therapeutix. If we zoom out, we can see where this was in a downtrend, came down to this level and moved back up, came down again, hit relatively the same level again. I would consider this to be a double bottom, marking your points A, B, C, and D. And then when we complete our pattern, the way we measure is by taking the height of the highest or lowest peak here. On a double bottom, it would be the lowest point, and measuring to point B. So then when we break through point B, we can take this measurement, and our goal or our target price would be right here at 848. So if I were to trade this, I would wait for point D to break through here. This would be my entry point. Once we break through there and get a candle close, and my target would be the distance between point A and point B moving up. So to show that, I'll take a long position. I have it from the distance of point A to point B. I'm going to move it over to where I entered the trade, right there. Place my stop loss probably right there. So I entered the trade here. I have my take profit set here. I would exit the trade once I hit my take profit. And we take a look at another example here on SoFi Technologies. You could consider this to be a triple top. This point's a little higher, but these two are relatively the same. Looking at it as a double top, we'll take point A, B, C, D. This is a reversal pattern moving down, so it's going to be a short position. So my entry would be at the level of point B was broken. And you can see here, we did not reach the take profit. So this is where you would have to adjust your trade in real time. We had a big move down, and then you can see where it flattens out and starts to go sideways again here. So in this instance, I would have probably seen that it hit this level, move back up, hit the same level again. I probably would have got out right there. And then another thing that you can factor into your trading is using the RSI indicator to determine if a stock is overbought or oversold. For instance, we have a double top here. Just a little bit oversold on the RSI, but that's a good sign that there could be a move down. So that's just another indicator increasing your chances of being right that the stock is about to move downward.